Let's get ready for Monday Mortgage Minute with your hosts, Tom McNamara and Bruce Woodburn.
I never stop loving that intro.
I know it's a great intro.
I feel like I should be in a boxing match or something, an MMA fight.
Right. So, hey, listen, I'm going to apologize in advance. I'm in a noisy environment, so if you hear a bunch of hooting and hollering, I'm at a place where I can't really control the volume. But I did not want to miss this discussion because we have some great topics lined up.
We have really important things for people to listen to. So if you're in real estate or considering buying or selling real estate, we want to hit some really hot topics right now. So pay attention. Stay with us throughout the whole podcast. It won't last more than about maybe 12 to 14 minutes tops. So
yeah, we're pretty quick right here. So, hey, and just so everybody knows, between Bruce and myself, we can help you across all 50 states. So no matter where you are in the country, reach out to me, reach out to Bruce. We'll help you out. So, Bruce, obviously current mortgage rates are the biggest topic, I think, in real estate right now. What's going on? What's driving all the fluctuations?
Well, I'll tell you what, the fluctuation is at least going in the right direction right now. We've seen rates come back down. We're starting to see rates anywhere from the low sixes even. Yeah, low sixes with really good credit. You might have to pay a little bit in terms of loan costs, but it's there. I locked a couple of deals in around 6.25, so it's absolutely coming down. Even if your marginal credit and FHA, you could still be in the high sixes to low sevens. I mean, it has gotten a lot better, and I think that we're probably not going to see a great reduction through the end of this year, but we can talk about that as well.
Okay, fair enough. Well, actually, that is our next topic, right about market predictions. So
I think there's a zero chance that on the 31st, what day is that? Is that like Wednesday? I think it is Thursday. That's the day the Fed's meeting. There'll be no chance they're going to lower interest rates. I just don't think it's going to happen.
All right.
And why?
No, I said, all right.
Yep. And then I think on September 18th is the next one. I don't think they're going to do it then either.
Ooh, I think they're going to do it on September 18th.
You think they are?
I do, yeah.
Okay. Well, I already got a steak dinner with one guy. You want to bet me another steak dinner? Because I need some lobster to go with my steak, okay?
I'd be happy to buy you a steak dinner, but I hear chicken salad is more your preference.
That's what I understand. No, I don't do chicken salad. You can get arrested for that. So,
fair enough.
So I think that you are probably not going to see a rate reduction by the Fed this year. Now, it could happen on September the 7th or November the 7th it would be the meeting after that one. That is just days after the election.
Too political. I don't see it happening.
So political. So listen, you can make up your own mind. Which politics has lower rates? Which politics has higher rates?
I don't know that that's even a discussion. I just think doing it 2 days after the election is too political. I don't care what.
Yeah, and that's why I don't think it's going to happen then. Now, I wouldn't bet on November just yet, but I would bet on July and September. So no rate cut, in my opinion. Now, having said that, depending on who gets in is going to depend on your future. So if you want lower interest rates, you have to take that into consideration. And this is not a political podcast, but I will tell you that the conservatives tend to keep interest rates down. They tend to stimulate the economy better. So if that affects you in buying a home, selling a home, or in your job, that's probably something to take into consideration.
Awesome. All right. So advice for homeowners or home buyers and homeowners, right? So
okay, this is a great one. Let's let you start with this one.
Yeah. I mean, today I think, other than if you were a cash buyer over the last few years, you had a great seat at the table. But if you're trying to get a mortgage, which most people do, right? The majority of homes are purchased with a mortgage. It was tough to get a home over the last few years.
Well,
And
you mean prior to March of 2022,
correct.
during
So
COVID, from
yeah,
2017
during
to
COVID.
2022.
Right. So I believe advice for buyers is if you're ready, it does, I'm not going to tell somebody that doesn't have any money at all to their name and they got bad credit, go buy a house. No, you're not ready. But if you are ready, if you've got the credit, if you've got some funds, if you've got the right mindset and you're ready to buy, do not wait for interest rates to
All
drop.
right.
And I'm
And
not
we need to
saying that
tell them
so I can
why.
I'm not saying that so I can sell homes. I'm saying that because when interest rates drop, prices are going to just go up.
And you're
Right.
going to have all those people enter the market that were sitting on the sidelines. And now you're into bidding wars. Sellers
Absolutely.
aren't going to make repairs. They're definitely not going to pay your closing costs.
Yeah, right now you have very little competition.
Right. And
Sellers have properties sitting on the market. They're flexible. They'll drop the price. They'll pay closing costs. They'll do both. They'll do
yes,
both. I had a deal where the guy dropped the price and gave closing costs, right?
right. And
So
that's a perfect scenario right there.
it absolutely is. Plus, for the moment, there's still Florida hometown heroes money available. So if you're close to ready and all you need is, gosh, if I only had a down payment, well, let's look at that. Let's get you a down payment. Let's get you
Absolutely. I've
now.
got a client right now that I'm getting into it. They didn't qualify when they applied, but they listened to what I told them to do about fixing their credit. Now they qualify, they're in, and we're getting them hometown heroes.
Great timing. Yeah, we just closed one last week, right?
Yep.
So
And there's about $50 million left. That should last us maybe 3 to 5 weeks.
yeah, so we've got some time, but not a lot of time. So
Not a
let's
lot.
get on it if you want to own, right? As
Yes.
far as home sellers go, home owners that want to sell, here's my absolute best advice that I can give you is one, price the home correctly. I'm going to say
Yep.
it again, price the home correctly. Don't look at your neighbor that sold 2 years ago and say, well, they got 700,000, so I should get 8. No, they got 700. You're lucky to get 650.
Well,
And
maybe, but that's what it takes somebody like you to look at, because
absolutely,
that might be true in one neighborhood, but not
it
true
might,
in another neighborhood.
it might not always be true, but just assume that you're not going to get above the top highest price that the last person got. It's just not the market. And if you get somebody competent to help you price the home, if you disagree with them, that's great. Go get some other competent advice. But if 3 people are telling you the same thing, you're probably wrong.
Yes.
I look at the statistics on the MLS, and the houses that are sitting on the MLS are the ones that were priced up here, and they're down and they're down and they're down
So what implications does that have to a seller when they overprice and it sits on the market for too long? What are the
it has
negative
a stigma.
implications?
It has a stigma. It's like
Tell us about that. What does that mean?
I'm going to say some words that are controversial, but it's like the ugly girl at the dance. You're just going to stand in the corner for a while. Somebody's wondering what's wrong with you.
Yeah.
What's wrong with your home? Why isn't it selling? So you're going to end up getting into a distressed sale.
You're going to get lowballed.
You're going to absolutely get lowballed. So, if your house should be sold at 550 and you say, well, let's try for 600 and we'll negotiate down. You're going to sit there for a while because it's just going to happen.
You'd be better off to put it at 549.9 and get bids on it and drive them up.
Well, what's going to happen is after you're at 6, you're going to lower to 550 eventually. And then you're going to sit until you get down to 520. And you're going to be on the market longer. You're going to have more extra mortgage payments, more tax payments, more insurance payments, more headaches. And you're going to sell for less than you would have had you priced it appropriately to begin with. So
I 100% agree with that.
Yeah, that's what I see going on, right? So homeowners, be smart, price it appropriately, and get it sold if you want to sell, right?
Yep.
Home buyers, get ready, get in there, negotiate closing cost credits, and get into a home, because home prices are stagnant right now. They're not up, they're not down. There's a little up, a little down here and there, whatever. But right now is a great time to buy. And even if they dip 5%, over the next 5 to 10 years, they're going to be up. You're going to go up.
I don't think you're going to see any dip of 5%. As soon as those rates drop, you're going to see these values skyrocket. Let's face it, nationally, we're up 6% from this time last year. That's a bigger than average increase in value.
Well, I know this isn't one of our topics, but the Florida condo market is killing us right now. So that it's the insurance that's going on with condos, all the HOA assessment fees that are going on with condos are absolutely tanking our statistics. Every statistic that I'm looking at now, I'm literally separating single family from condo 100% of the time because it's a tainted pool.
Well, they're going to figure that out. I think these condos are just going to have to figure it out. The owners are going to start to feel the pain. And if they don't get their act together and get their budgets and their reserves in line, all they're going to do is deteriorate their values. So they're going to have to get back on the Fannie Mae list.
They have no choice but to get their balances in line because that's the law, right? The law says now that they have to be 100% funded on their current assessment, which it's funny. A lot of people think that's unfair that they have to be 100% funded, right? But it's not that you have to be prepared to replace the whole roof. You just have to be along the way to match the predicted time. So if a roof is going to last 20 years and you're 10 years into it, you better have half the money that it's going to take to replace that roof. And over
your insurance company's going to want you to fix the roof, whether it's leaking or not, in 15 to 20 years.
Absolutely. Otherwise, your insurance is going to skyrocket, right? Yeah. So anyway,
I think one more topic we got to cover here.
Yeah, let's do it. We got refinancing tips. Let's talk about.
So, it's really interesting because, who thinks that anybody would want to refinance when they probably are sitting on a 3.5% or a 4.5% interest rate? I had a client the other day was at 2.5%, right? So who wants to refinance? That would be painful to refinance, even if you could get 6.25%, right? But you have to look at the whole picture. So when we have clients that come to us, typically they're going to go, I don't want to refinance because I have a 3.5% 30-year fixed rate. I just want a home equity line. Well, home equity lines of credit aren't as cheap as a regular mortgage is today. They run between 10.99 and 14.99%, and they're adjustable. Now we have fixed rates as well, but so now you have a 3.5 rate and you have a 12.5 rate. Your blended rate's going to be 8.5 anyway. So I look at that and I say, which is going to be better, an equity line? Or if we are going to use that refinance for debt consolidation, now this is just debt consolidation. I take how much are you paying in all your debts right now, including your mortgage. And if I refinanced your home and wiped out all your debts, what's your new payment going to be? And that will tell you which direction to go in. Now, there's other people that say, hey, when should I refinance? Well, it depends on what your purpose is. If your purpose is for rate reduction, which is payment reduction, or term reduction, going from a 30 to a 15, then we've always thought that 2% or 1.5% is the rule of thumb. You're not going to refinance if it doesn't drop 1.5 to 2%. But that's not always the case. That would be the case if you had your mortgage for 10 years. But if you've had your mortgage for 1.5 or 2 years, or maybe even 3 years, you haven't even begun to start chipping away at the principal anyway. So you'd be better off to do it then, even if you could lower your payment by whatever amount makes sense. And when I say makes sense, lenders have to do a formula for what's called a net tangible benefit. And that is an official term. So a lender couldn't refinance you if you didn't meet the net tangible benefit, because they then perceive that as being predatory. So if you can't lower your rate by at least a certain amount and it doesn't pass that formula, which we have to do, then you can't refinance no matter what. So we have to run that formula. If you meet the net tangible benefit calculation, then we can proceed, and then we can determine which way is the best for you to go.
Gotcha. Hey, we actually have one more topic we had queued up, and that was the impact on real estate. So how are these trends affecting buying and selling, right? So I think I talked about my end, buying and selling. What about the mortgage rates?
Well, so on mortgage rates, obviously we see things slow down considerably when rates are up. See things pick up when rates are down. But interest rates people have kind of gotten a little bit more used to it. So even though the market was stagnant through the last 3 quarters of 2022, the all of 2023, and the first half of 2024, that was a lot longer. That's almost 2.5+ years of stagnant economy. However, people are starting, now that the rates are dropping a little bit, they're coming into the market. I have not had a day off. I have been working, pre-qualifying new clients every day, Friday, Saturday, Sunday, into the night, putting on presentations. So people are absolutely jumping in the market right now and taking advantage of these lower rates and opportunities where they know the seller's going to help them. If you're a veteran and you're trying to go no money down, you're not no money out of pocket unless the seller pays your closing costs. If you're FHA and you could barely squeeze in to come up with 3.5% and you don't have a seller pay your closing costs, you're toast. So now is your opportunity. We'll refinance it when the rates drop later.
Yeah, absolutely, man. Absolutely. I say, we had a closing last week. It was one of my favorite ones because I absolutely loved when my buyer called the title company to find out how much money they needed to bring to the table. They were told 0, don't bring any money. And then I looked at the closing disclosure and looked at the details. And not only did we get them enough closing costs to cover everything, but the down payment assistance we got them lowered their principal by about $1,500.
Yep. Yeah.
Right. So
they got all the closing costs paid and a lower loan amount.
They got everything paid for. I think they were about, give or take, they were about $1,800 out of pocket.
That's because they paid for their appraisal in advance.
Right.
They paid your earnest money deposit back.
Right. They did earnest money, they did appraisal, and they did some inspections. Right.
Yep.
So they were $1,800. Maybe let's call it $2,000. They were $2,000.
That's your first month's rent on a 2-bedroom apartment. You're not even, that's lower than you can rent an apartment for.
Absolutely. And they bought a beautiful house for, around $350. Right. So, they're all set, man. They were super happy. I can't wait to get back to Orlando.
That warms my heart when we have that. It just absolutely does. There's nothing Tom and I like more than helping somebody that really, really needs our help. And that's what we're there to do.
Absolutely. Hey, Bruce, I'm going to go back up, get back up to that party, man. I will catch you soon.
Yep. Enjoy your time.